Hey, this is Matt from InvestiQuant. Today is Thursday, February 4th, 2021. And yesterday we had a pretty indecisive day in the markets. We opened up just a little bit. We tested lower, we tested higher, and then we closed just a touch above the open, giving us a new 5-day high close, but it did so with what's called a doji candlestick. And a doji is just where you're closing roughly at the same area as where you opened at. And what I want to do this morning is take a look at that type of price action, that doji candlestick taking place after a run-up. So let me set this up and discover. We'll look at all four instruments. The setup is going to be based upon entering the market at the open, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. For the opening filters, currently we are trading down, but still within the range of that doji candlestick. So I'm going to go ahead and use that as the gap direction and location. So I'm going to click gap down, and then I'm going to go to the opening area and hit equals next to open and prior day range. And with this pattern, where you open at really does make a difference. So if by chance we were to change where we are opening at by the time the market opens, then you would want to come in here and adjust this because it will change the results. Next, I want to go in here and select the price pattern that yesterday was a doji. So I can do that in the candlestick section, which is right here, or I can just grab it from the active today section. Candlesticks, day after a doji, and then right underneath that, I'm going to grab day after a 5-day high close. So that means this doji candlestick is coming after a run-up of some sorts. And then lastly, I'm going to go into the indicator section and say that we are above a 10-day and above a 200-day simple moving average, and click View Results. And here we go. These are the results of going long at the open, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. When you gap down within the prior day range, and the prior day was a doji candlestick, which means you're opening and closing in roughly the same area, that closed at a 5-day high. This is taking place above a 10 and 200-day simple moving average. Historically, we've got 57 samples in the S&P dating back to 2003. The NASDAQ 52 samples, the Dow 51, the Russell 52. So very similar sample sizes across all four instruments. And the win rates are all pretty similar as well. You can see the S&P's coming in right at about 60%, as is the NASDAQ. The Dow coming in 59%, and the Russell coming in a little bit stronger than the other three at 65%. So all of these hanging roughly around that 60% area. If we look at the average win and average loss, the average win is a little bit larger for the S&P. The average loss is a little bit larger than the average win in the NASDAQ. They're pretty similar in size for the Dow and for the Russell. So those two aren't really skewing one way or the other. But the win rates on these are skewing to the upside. So the majority of these historically have ended up with what would be a green candlestick the following day. And like I said earlier, this one, the opening location really matters on it. So if it ends up gapping up in the prior day range, these stats will change quite a bit. So you'll probably want to pay attention to that as we get closer to the open. Right now, we're currently trading down a bit within range. So that's what I'm showing you here. But good luck today, and we will see you next time.